This video is sponsored by the award-winning Daily Market Movements trading platform. To open a live or demo account, simply visit dmmtradingplatform.com. Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the Nasdaq100 futures chart. Just before I start today's video, anyone who's interested in joining my free analysis group over on Telegram, then please do not hesitate to scan this QR code on your screen. Let's start here by looking at the Nasdaq100. We're currently trading at 11,900 now. Today we've seen lots of volatility, and that was due to the jobs number coming out. 200,000 jobs created in the month of November was the number that was expected. However, we got 263,000, so it came in a lot stronger than expected. And as we're trading in a stock environment where good news is bad news and bad news is good news, we have seen the market pull back on that stronger than expected job number. Nevertheless, what's more encouraging here is that we've seen buyers hop back in here at the open, and we're snapping up the Nasdaq100, pairing most of our losses. Now, it's all about the close today. If we can close anywhere between, minus 0.5% to, positive territory, that should be a massive win for the bulls. If we end today's trading session, minus 1.5% or lower, then that shows that the bears have got control, and we're likely probably to go down to that 50-day EMA, which currently sits at around 11,600, and pretty much wipe out all of Wednesday's gains. So this is very encouraging what we're seeing here, and I feel like it could potentially spark a move higher going into next week above 12,115. Now, what's also very important for this market at this moment in time is the bond market. I posted in my free analysis group some research this morning where we've had the 2-year bond forming this beautiful looking head and shoulders pattern. And it looks highly likely that we are going to break this neckline. As you can see, we're currently just treading below that neckline. After the jobs report, we did spike up back towards it, but we're pretty much at that 4.3% area. Now, if we have a further breakdown here, it could potentially trigger a move down towards 4%, and that should be seen as a massive positive for the stock market. So all eyes over on that fixed income market. And then of course we're looking at the dollar here, the dollar bouncing back still at 105, but we're trading still on that 0.61 fib area. Sorry, that 0.38 fib area. Now if we break below that, then we likely go to that 0.5% fib area, which is down at 102 to 101, roughly around the area. And I feel like that's highly likely, and that will help the earnings picture. Remember, the earnings picture has been very cloudy this past earnings season. That's because of the high FX fees, and which has inflicted mostly tech companies really. Like stocks like Microsoft, which get about 80% of their business from Europe and Asia. Of course, with the strong US dollar, they lose a lot of value on their earnings when bringing money back to the US. So all eyes on the dollar and the bond market. But I feel like the Nasdaq100 is digesting this jobs number very strongly. Next week's going to be huge. About just in over a week's time, we have the CPI reading. Inflation, if that comes down lower than expected, then that is going to potentially be a catalyst that sends this market significantly higher. And then 3 days after we get that CPI reading, we hear from the Fed and their interest rate decision. Is it going to be 0.5 basis point hike? Is it going to be 0.75? Everyone's saying it's going to be around 0.5. But what's more important in that meeting is the guidance going forward. Is there going to be a suggestion of a pivot, halfway through 2023, maybe the back end of 2023? Well, days like today when the jobs number comes in as strong as what it did, that seems highly unlikely. But that being said, that inflation report, the CPI reading, is going to be 3 days before that Fed minutes meeting. And if inflation comes in significantly lower than expected, you can bet that everyone's soon going to forget about today's jobs number, and they'll be more focused on the fact that inflation is downtrending.